Hi, we are going to have a look on the basic difference between the residential mortgage loan and the commercial mortgage loan and some of the key factors of the commercial real estate mortgage. So as we have already discussed and have a video regarding the residential mortgage, so you have not seen yet, and you can check to the video list and go and have a look on that, and you also find a link on the link in the I button. You can check on that. So I will put the link in the I button in a few minutes. So here is the few difference are between the residential mortgage and the commercial real estate mortgage. So residential, we know already that the loan against property, and the property basically used for the residential mortgage will be called as the residential mortgage. And when we are looking at the basic key points of the residential mortgage, like the mortgage are the loan which are used to buy the home and other type of real estates which is for used only for the residential purpose, and the property itself the several collateral for the loan. The property is itself a collateral for that loan, and it's various types of loans in the residential mortgage, like the fixed rate, the adjustment rate as well, and the cost of the mortgage will be depends on the loan times, the loan terms, which is like 30 years and 50 years, 15 years as well, and the mortgage rate is also depends, which is the variety wise depending on the loan type, product type, and the qualification of the applicants, which has a basic review or basic idea about the residential mortgage we all know and already discussed in the previous video. So we will do the focus on the commercial mortgage and the commercial real estate mortgage over here. So the commercial, which is also called the CRE in the short form, the commercial real estate is income producing property used solely for the business rather than the residential purpose. Example, you can do the properties of commercial like the real estate, retail malls, the shopping center, office building complexes, hotel financings, any retail shops, including the acquisition and development and the construction also of the properties types, typically accomplished through the commercial real estate loans and the mortgage secured by the lien on the commercial property. And while reviewing our day-to-day working in the commercial real estate property, there are some of the points, the key term, the important words need to remember while we are look into that. And this is the basics, the start and the basic knowledge about the commercial. So we are not going to dig into that words. So this is a basic words to let you know that this is the words, the important word in the commercial real estate underwriting or the review on that part. The terms like commercial real estate mortgage is like the capital stack, revenue items, the operating expenses, RUBs, and NOI, which is the net operating income, capital expenditure, and gross rental multiplier, also called at the GRM, the vacancy rate, the vacancy the physical vacancy or the economic vacancy is there, rent roll, bad debt, cash flow, which is also the leverage and null leverage, return on costs, return on assets, ROA, return on equity, which is ROE, cap rate, and these are the terms. Source and users, contingency, several. These are the terms which is even often used in day-to-day work in a commercial real estate mortgage underwriting or review while working on that. So this is the small part of basic, the brief about the commercial real estate, and we will look into this term briefly in the next video, which is our upcoming videos. So now we will discuss some of the points like loan term and amortization period for the commercial real estate mortgage. It is quite different from the traditional residential mortgage. How we will look into that. A loan term is the amount of the time that the borrower has to pay the principal balance, but a amortization is the amount of time over which the loan payment is calculated. Okay, so here the term is the period when all the payment, all the repayment need to be completed, and the amortization of time over which the loan payment is calculated. Its general commercial real estate loan has a term that range from 5 years to 30 years, but most trend it is being the 5 years to 10 year range. So we will talk about like the amortization. So what is the amortization over here in the commercial real estate? A loan amortization period like is the amount of time over which a loan payment are calculated. As we discussed earlier, the loan payment are calculated. In a commercial real estate transaction, it is common for a loan to have a split amortization, meaning the loan term and the amortization period are different. For example, a loan could have a term of 5 years, but the payment could be based on the 25 years amortization schedule. So here as the amortization and the loan term are different, and there was a balloon payment which is need to be paid after completion of loan term, not in the amortization schedule has been completed. So if there is a 5 years of loan term, a bulk balloon payment, rest of the loan payment supposed to be completed by the end of 5 years. So this is the loan term is defined, and is different from the commercial, different from the residential mortgage.